Bitcoin has seen a nice reversal develop from the 92k low. In today's video, we are going to be discussing the recent reversal and implications this may have on the future of Bitcoin's price action. Diving deep into both the high time frame and short-term charts, as well as the broader cryptocurrency market, we're going to be discussing exactly what you should be watching out for and how the price is developing. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us over on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in taking your trading to the next level, join us in VIP, where we post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to all of our group chats, our general chat, our trading chart, education chat, our daily video, our help, and our news chat. We have over 700 members, and we've been doing this for around about 50 plus months now. You can find out more information by clicking the pinned comment in the free channel, clicking my name, or the first two links to find our entire trading track record and a 10-minute video showing you inside the channel. Check it out. Let's go ahead and dive in. So as we can see, over the past 24 hours, we have seen some pretty big things occur for Bitcoin. Number one, mainly, we have seen again Bitcoin bounce from a very important level, this level being that 92,000 to 91,000 low. If we zoom back out to the 4 hour, as we discussed in our prior videos, this was essentially the most significant reversal point. If we were going to see any sort of a reversal, as we discussed in our Telegram channel, it is likely we are going to see a reversal from that point. We said the range low has been tested and has continued to hold over the past 24 hours. If there is any level where the bulls are going to have a chance at reversing the price, it will be from here. Since then, we have seen about a 4 to 5% push upwards for Bitcoin, which is fantastic to see as that 92 to 91,000 level holds yet again. We're going to be diving deep into that in the video today, but we'll also be taking a look at the short term, because over the past 24 hours, we also had some massive volatility. We saw this strong rally toward the upside during the day, followed by some aggressive chop following the NFP data release, which we'll discuss in a second, following now to the price action more or less consolidating sideways. So we've got a lot to talk about. Let's go ahead and start on that data over here. 24-hour volume is down 4% at 226 billion. Liquidations down 22% at 308 million, with 127 million in long liquidations and 180 million in short liquidations. Moving over to the DXY, we can see the DXY has pushed upwards to hit our first target. If we've been following the channel, we said that upon the breakout of our range high, our first target was the 110 to 111 region. We have hit that 110 point as a consequence of, again, the NFP data coming out relatively bearish for risk assets. The overall forecast was 200,000, with consensus 160,000, and the previous at 212,000. We actually saw that come at 256,000 above both the previous, the consensus, and the forecast, essentially being leading for inflation moving upwards faster than expected. This is not really good to see in terms of when we're contextualizing this number with the statements the Federal Reserve have been saying, the narrative they're trying to push, which is, again, inflation still needs to come down, and they're going to prioritize that over dropping interest rates. Essentially, that is what they've said. Will they go ahead and do that? That's an entirely different story, and things do change. But that is a statement they've pushed forward. That is the context in which the statement has been provided, and that, of course, is the narrative that is been shaping the broader markets now for about a month, which is interest rate reductions are going to be less than expected in terms of frequency, and that has pushed the asset market down over the past month and a half since early December. Taking a look at the S&P 500, we can see the S&P 500 is still coming toward the downside. As you know, if you have been following the channel, I have been bullish on the S&P 500 ever since we broke this resistance all the way back in May 2023. I have remained bullish, and every single day I told you $6,000 was our target. When we hit $6,000, I turned short-term bearish. I have been short-term bearish since. I will remain short-term bearish because I understand policy stipulates demand. At the moment, what are we seeing? We are seeing uncertainty surrounding economic policy, which directly impacts perceived systematic risk and the potential for future asset growth. In this particular scenario, we are looking for the S&P 500 to do two things. Number one, for us to turn bullish again, we need to see this high break. If this high breaks, we will likely continue upwards, and we will only break this high if the uncertainty surrounding future interest rate reductions become more clear. Now, we'll find that out in our next meeting. That is going to be in 18 days time. But until then, the potential for further corrections back into these major levels of support at 5,700 is on the card. So this is a zone of uncertainty, okay? This is uncertainty. Below 5,700, bearish. Above 6,100, we see bullish continuations. The direction of which we move is going to highly depend on not only the upcoming interest rate decision, but the Federal Reserve press conference following, when they talk about future interest rate changes. That is what we're watching out for. In terms of interest rate changes, again, at the moment, 97.3% of the market are now expecting an interest rate pause. This is something to watch out for moving into the decision, because if we do see interest rate reduction, the market will massively rally, as again, this pause is more or less being priced in as we speak. Moving over, guys, like we said in today's video, we have a lot to talk about. As you've noticed from just already, we've got so much stuff we're going over, but we haven't even touched on Bitcoin yet. We've got a lot to talk about on Bitcoin, and we've got a lot to talk about on these broader markets. So before we get into that, go ahead and smash that like button like we said already. Show some support by leaving a comment. And if you want to support the channel even further, sign up to BitGet, BitUnix, or BingX with the links down below. Those are our exclusive links to the exchanges we personally use. You'll get a lifetime trading fee discount of 15% off all your trading fees, which can build up to 45%. Support you in your trading journey, support the content, support the channel, and go ahead and sign up. We'll play an ad and get back into it. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's dive straight back into it, starting on the total market cap. Now, this is a chart we've been watching for many days now, many weeks actually, and we're talking about it almost every single video. The reason being is because the total market cap is a fantastic tool when we're asking bigger questions such as, well, is cryptocurrency bullish? Are we going to see continuations, or are we entering a bearish phase? And the answer to all of those questions are hidden within this chart. This is essentially a representation of the entirety of the cryptocurrency market cap. Bitcoin holding about, I think, about 58% of that market dominance, and altcoins being the remainder. If we're taking a look at this chart here, we can see a few things. Number one, we can see similarities to our 2021 cycle, which was essentially when we broke through the prior all-time high, so the 2018 high. We saw an aggressive rally, followed by a very steep correction. That correction did not result in the 2018 high being retested. In fact, we just bounced prior to the retest, only then to see a direct continuation upwards. In this instance, we are seeing something very similar. We saw a breakout of the 2021 high, followed by a very strong rally toward the upside. Then we have seen a very strong correction, but we have not retested that $3 trillion prior 2021 high. So we are seeing some similarities around here. In fact, I would argue we would be very much tracking that 2021 cycle in terms of the total market cap on par if we did not have that unexpected uncertainty pushed by Jerome Powell and the Federal Reserve in the December meeting. Again, that uncertainty surrounding future economic interest rate decisions provided or opened up a whole heap of uncertainty in the market and has really caused, or should I say, thrown a spanner in the works for future expectations. At the moment, we have seen that uncertainty play out in the S&P 500 and on Bitcoin with prices correcting over the last few months, but we have not broken down from major horizontal support levels, like we said already. For the S&P 500 to turn macro bearish, we would need to lose 5,700. For Bitcoin to enter a steeper downtrend, which we'll discuss in today's video, we will need to lose 86,000. And for the total market cap to flip bearish, we need to drop back below the 2021 high, which is sitting around the $3 trillion mark. We're currently sitting at 3.22 trillion, about a $200 billion market capitalization difference there between where that bearish invalidation will be. The reason why dropping below the 2021 high would be so bearish for the total would be because of two reasons. Number one, we would have structural deviation from historical patterns, which can go to increase the likelihood of future movements to play out similar to what we have seen before, or in this instance, it would likely deviate from the expected pattern we have seen play out in the prior cycle. And number two, it would mark the breakout of the 2021 high point as deviation, simply suggesting that the price action has pushed up, it has not met enough demand, there is too much selling, and the price action corrects, saying that essentially Bitcoin is overvalued at these prices and the market will push the price down. So we'll likely then see a correction back into these liquidity pockets. Now, I do not believe this is likely, and I'll talk about it in today's video. I only would be expecting this move if we see Bitcoin lose 86,000, because Bitcoin, being 58% of the market share, market capitalization, does essentially have a massive weight over where that total market cap goes. If Bitcoin does drop below these critical high time frame supports at 86,000 and then see steeper corrections, we will very likely see the total market cap follow suit. However, until that happens, we are expecting that 2021 to play out, provided the economic policy that is expected does not get massively bearish. They are already leaning into the bringing down inflation a little bit. And as we know, to bring down inflation and also drop interest rates is completely counterintuitive. It's contradictory. We can't do both. We have to drop interest rates and therefore accept inflation is going to rise as a consequence, pushing asset prices upwards, or we have to accept that we are not going to drop interest rates. We're going to pause interest rates and try tackle and bring down inflation. We cannot fight two battles at once. One of those battles have to be fought. At the moment, we were expecting the interest rate reductions to continue, and then the Federal Reserve has shifted that back to they want to take out inflation. So depending on which way they lean into harder, will massively determine where these markets go in the macro, and that uncertainty is exactly why we are seeing what we have seen over the last week and a half or month and a half in the asset market, right? It is a representation of people's emotions and decisions. That's all the market is. So taking a look at this, guys, we are bullish on the macro for the cryptocurrency market, provided we hold above. If we drop below, we will be very, very cautious and we'll probably be turning bearish. But until then, macro bullish. Total 3 market cap. The same thing, guys. Levels are slightly different. For altcoins to enter a parabolic move upwards. Now, the altcoin season technically started around about the 14th of November when we broke through the altcoin season trigger. Now, we are technically in an altcoin season, but altcoins have been performing miserably, again, because when there's uncertainty surrounding future economic policy, the particular assets within any asset class that are most speculative drop the most. Pair that with the fact that the altcoin market is massively diluted this cycle from thousands and thousands of shitcoins, we see the majority of altcoins massively underperform in both upward moves and downward moves. So it is not moving as unexpected as we would anticipate. The total market cap is still sitting above the altcoin season trigger, 840 billion. A loss of 840 billion on the macro would be the nail in the coffin, which would signify that altcoin season has failed to really get anywhere. Once more, for us to see that explosive move upwards, the key level we now need to break above is going to be the 2021 high. Every single time we broke through those prior highs, that is when we saw those explosive legs upwards for the altcoin markets. We're watching that closely, but it is important to note that while we remain above 840 billion, the potential for that move is on the cards. Let's move over to Bitcoin, guys. Let's start on the higher time frame and then break it down. On the high time frame chart, there are some very important levels we are watching, and I'm going to go ahead and explain them. First, let's talk about the support levels and the worst case scenarios, and then we'll take a look at, the reversal, how this reversal can develop into a higher time frame uptrend, etc., etc. At the moment, there are two levels of support we are watching, which are the most important levels. Now, between these two levels of support, we have got some liquidity points, such as 90,800, such as 88,600, 89,000, etc., etc. But the two major reversal points for Bitcoin are going to be that 86 to 87,000 and the current area we are sitting, which is around 92,000 to 92,500. As you can see, we have retested this area numerous times over the past month and a half, and we have bounced every single time, okay? This area is a critical area of support where if we lose, it is highly likely we see a move between the prices of 92 to 86. We're going to see a move to fill this region. Will we come all the way down? It is possible we do, but it is likely that every single one of these levels, 90,800, 88,600 and below at 86 to 87 all become zones of possibility, meaning these targets become realistic. Until then, until we break this support is support until it is not, and we do have the potential to swing back toward the upside. We're going to be talking about that potential in the video in just a second. But we need to discuss, number one, what would happen if we actually lost this support, and at what point will we turn high time frame bullish again? What resistance do we need to break to, eradicate the fear of these continuations lower? So, number one, if we lose 86,000, we are in big trouble for Bitcoin. If we look at the price action, we zoom out to like a 12-hour chart, we can see this massive VRPV gap. Remember this consolidation. Now, for about 8 months, we were in this descending channel formation. As you know, this entire time I was telling this is a bullish consolidation, expecting a massive move to come from it. The larger the consolidation, the longer the compression, the bigger the reaction. It's like I use the analogy like a pressure cooker or like you're blowing up a balloon. The bigger it gets, the louder the explosion when it pops. This is kind of the analogy we use to explain this. The longer that consolidation, the tighter it gets, the longer it's been going, the more liquidity starts to pile up, and when it breaks, it just pops toward the upside if it's a bullish structure or downside. We saw this massive rally, nearly doubled in valuation, 67% in valuation in a matter of weeks. Now, the problem with these moves is we leave these massive low historical resistance range opens, which is essentially a period of price action between 2 points where there is very little historical orders that have been placed, right? We've just basically saw rapid volatility through this region, which means that if we drop back into this region, it is very likely we will see the equal and opposite reaction, which is downward volatility take in effect, because the volume requirements to push the price between 86 and these lower horizontal levels are significantly lower in a low historical resistance range due to there not being historical orders placed. So we do not want to lose 86, and by losing 86, it is likely the market will see a steeper correction, which could turn into a high time frame downtrend. That is worst case scenario. We want to avoid that at all costs, okay? For Bitcoin to turn high time frame bullish again, it needs to get above, obviously, 100,000 being a psychological level, but the trigger point it now needs to break is going to be 102.5. If you watched our video when Bitcoin was up over here, we told you Bitcoin saw an amazing breakout. It was an amazing breakout. There's no doubt about that. However, we had to break above 102.5 to see that next leg toward the upside. That move here is still going to be expected, and the trigger point is still the same, 102.5. Let's jump over to the short-term price action. As we can see, we are now entering the weekend. Again, volume starts to drop off on the weekend. It's possible that after we've had a massive amount of volatility moving into the weekend, we see some of these candles, eaten up. We see some of these liquidity levels retested into the weekend. What we can see here is we pushed above our prior high. This is going to be our lower high point, our change of character. We momentarily broke back above here, which is a good sign. And what we have done is we've created a lower high for Bitcoin on this way up. This lower high has created a diagonal trend line, which we have this diagonal trend line represented, which crosses through and above the critical level of support at 92.5 to 92,000. While Bitcoin remains above this diagonal trend line, even if we see a correction back to it, the expectation is going to be upwards into 97K, okay? 97K is going to be the next level of resistance. We can see right over here, it is a major liquidity level. If we fail to do so, if we fail to hold this region, it is likely we come back down to tap this strong low, and the price I'd be watching, okay? The price I'd be watching for reversals initially is 90,800, okay? Pay very close attention to that. If we see the breakdown here, 90,800, that is going to be our sell side liquidity, a massive, massive point of reversal for Bitcoin. We could see deviation. Now, if we see that deviation, which will be a loss of the 91137 into 90,800, and we bounce back above, that will be confirmation for continuations upwards with stops below that region. If we do not do so, we will see continuations into the lowest part of support. That is very important, guys. Pay attention to that. Short term is still sketchy, right? There is no real confirmation here that Bitcoin is going to directly continue upwards, besides the fact that we have established what we will call the beginning of a reversal, right? We saw this dragged out bearish volatility, bearish volatility, bearish volatility, and we are starting to flip that over here, but we are still seeing chop as we flip that. That chop is a sign that there is still indecision if the market wants to continue upwards. What does this really mean? It means the sellers have exhausted, okay? But the buyers aren't really stepping back in over here at enough of a rate to push the price action upwards. So we're still in the zone of kind of absolute indecision, but we do have these lower highs and these support levels, which could provide, launch pads for continuations for those buyers if those sellers are unable to push the price below particularly this lower high. So keep your eyes on that, guys. Thanks for tuning in. Have a fantastic day. Catch you guys on Monday. See you then.